Good afternoon, everyone. Actually, good morning, everyone. I'm throwing myself off here today, right? We are an hour earlier at the moment at 1100 UTC. That's because of the US daylight saving, so we can get the show out and in front of the equity market or the equity pre-market open. How are we all doing today? Big shout out to everybody that's joining the stream live, as well as everybody that's joining this and watching us on recording. Now, what you can see on the screen at the moment before we dive in is Crypto Burb's profile. Just for full confirmation, that isn't me. He's the attractive bald gentleman with a Viking-esque beard. I'm very, very challenged in the beard department, but do have a good full set of hair on my head, thankfully. However, what this fine gentleman and our company over at the Bird Nest have done is open up the paid Discord until the end of this month. Okay, so if you're interested to come in, grab your hands on all of the education that's in there, all of the trading team calls, the wonderful community we have in there, as well as all of the resources, including the Burbicator Pro in the house indicator and tons of other goodies, then you can do so just by popping along onto Crypto Burb's Twitter profile. You can follow the instructions to join the 30-day program. Not quite 30 days now, you know, you've missed out on a few of those, but there's still plenty of time left through until the end of the month. Okay, so do come along, make the most of it, come and join a really good, fun, vibrant community who are not just focusing on cryptocurrency as well, looking at traditional and legacy market plays too. So if that's of interest, you can follow the description there on the Twitter profile and you can come across and join us. And if you want to do that, and if you want to do that today, you can also come and join my live trading session this afternoon, where we're going to be looking closer at the build up to FOMC, which is where we want to start the day. Well, we're actually going to start the day on the charts, but we are going to take a look at the news today, which is absolutely massive and a huge potential catalyst in waiting with the FOMC rate decision. For those of you who maybe don't know what that is, that's where the Federal Reserve in the United States are announcing their decision on the rates. Are they going to hold? Are they going to cut? Are they going to put the rates up? What's the state with inflation? We also have their projections coming today as well. So that's the economic projections. So yeah, I mean, we've got a day of real volatility. We started the day earlier, or actually through the night, 2:25 a.m. with the Bank of Japan rate policy as well. We're going to cover that quickly too. But for now, I just wanted to kind of start on the Bitcoin chart and just kind of remove all of the noise, remove all of the stress, and kind of just bring a little bit of focus to where we currently are. All right. NPA Young Believe, Evil Gemini Burned. How are we doing, guys? Great to see you. And for everybody else as well, apologies if I don't see your comments. I only get the ones I believe that come through here are, I think, from YouTube, where we have so many of our viewers actually come in through Twitter. So a big shout out to all of you, however you're watching or listening. If you do have any questions, you are able to access the comments, please do. And if you are able to get onto YouTube to watch this as well, you'll be able to have your comments seen. And if you do enjoy the content, please do hit the like button for us. So the reason that we zoom out on the charts is to gain our major context. The markets are typically driven by longer term players rather than shorter term players, okay? So what we're looking at here is looking at this as, you know, treating it and looking at it like an investment vehicle rather than kind of like, you know, intraday or short term swing plays. Now, the market is in flux, right? And what we get is you get these expansions, okay? Then once you've had expansions, you follow them with consolidations and so on and so forth. So we've had the expansion, we've now had this expansion here. Price then entered this consolidation, and ultimately we dropped out the bottom of this now, all right? So what we're looking for here is we're saying to ourselves, okay, what's the value of this asset, right? Not, you know, okay, it's $83,411 or whatever at the moment, right? It's what's the perceived value, or where is this considered value by the market and by people that are looking to add this to their balance sheet, all right? And it's clear now, and these things are always clearer in hindsight, that this obviously wasn't considered value. I can't remember exactly where it was, but we did do a show on this where just running through how important it can be to understand the, you know, traditional markets. I know a lot of people in crypto very excited by the tech, very excited by the possibilities, the blockchain, etc. I am too. I'm, you know, first and foremost, I'm a trader before I'm, you know, anybody that would consider themselves a technology buff, right? But I'm surrounded by some of the very, very best who keep me informed. Now, the one thing, or one of the key things that we can take from the markets is looking, and one of the reasons that I cover the DXY, the S&P 500, the NASDAQ, the bond markets, etc., is to just take a little kind of nibble at what those market conditions are setting for risk assets. Because if we're very, very, you know, if we're heavily invested in Bitcoin and cryptocurrency, it doesn't mean that the market conditions are there to support those bids, okay? So that's what we're going to take a look at today, and that's why, you know, whether you're into cryptocurrency, bond trading, FX, etc., the FOMC decision tonight is so very key. So we're going to cover this over shortly, but to just stick with the TA just for a moment, just to kind of look at Bitcoin, then we're going to cover the news, and then we're going to dive back into our alt request Wednesday. So if you have got any altcoins you want me to take a look at, please do let me know, and I will get those tickers up and we will look at those. So let me just clean this up for a minute. So no, actually, let's put that back on there, right? Because this is a really interesting area for me, right? I'm going to do this in green because you know, this for me, other than this is the key area for buying, right? The top of this range, because this is the previous consolidation range where, you know, price had found its value, all right? So you see these expansions, small consolidations, okay, actually, the market's willing to pay a higher price for this, so it does. It then finds value here, pumps up a little bit. You get these periods of consolidation while the market's kind of saying, okay, is this asset value at this price? Yeah, so are there people willing to buy it here? Yes, lots of people, right? So then it gets to a point where the next consideration comes in. We often see these adjacent to previous all-time highs or consolidations, where then it's saying, okay, now the job of price here is to establish itself above this, all right? So if we are going to break down from here, basically, this is the really kind of key area. Now, you know, it could be from this high, you're looking around about 73, 74K around there. You know, but actually when we look at these kind of these wicks in this area where price was selling off, where it really couldn't get above until it did break out, this is a really key area of interest for me. Now, the other thing to consider here, if we look at the charts, is, and I've heard a lot of people talking about this, right, is looking at the kind of power of three, which is where you're looking for consolidation, manipulation, and then expansion, all right? There's a not particularly great version of it down here, right, but it's not terrible. You kind of see it in here where you have this consolidation, price moves to the offside, that's the deviation, price then moves ultimately to what is range high. Then you get the breakout of that, price moves away. Now, we kind of had a little bit of a reverse one of these in hindsight, right? If we look at the consolidation here, we got the consolidation here. Don't get me wrong, you had this wick down here as well. I'm not saying this is the cleanest model in the world, but then you had the deviation, right? Or accumulation, manipulation, and now we're into that phase of distribution, right? Which is obviously going lower. However, if we flip this on its head and we look at this as a consolidation range here, and I know this is, we've seen a lot of hopium deployed with this, right? That this is the deviation, and we're now looking to get the expansion here. All right, now we don't know with this obviously, but a lot of people were asking me, okay, well, how do you play that model? It's just really simple range trade, everyone, right? So when you're in a range, we can even use our handy range tool here, right? Right, so we've got our range here. Now, when price enters, once you've established the range, for example, something like this, and price is hacking around in here, what you tend to get are deviations of the range. In fact, you know what, I'm gonna do that with this because that just looks awful, right? So when you've got a range, and price is in the range here, price is moving from range low to range high, what you're looking for are these deviations, right? So if price deviates a range and then gets back inside it, we're then looking for price to travel to the far side of the range via the midline. So this is always a good place to take some profits, all right, or to mitigate some risk. And then you're just trading this, all right, both ways until you get a confirmed breakout, right? And don't get me wrong, you can still get caught in these fake outs and bits and pieces like that, but that's generally your range trade. Price actually spends a lot more time in a range than it does trending, all right? So when you get these deviations, price steps back in, you're then playing the strength to the far side of the range, you get a deviation of range highs, price steps back in, and then you play the weakness down to range lows. Why? Because price is fluxing within this area of value, right? You can also, you see people, there's much better exponents of it than me out there. People like, my good friend and fellow trader at the Bird Nest, Razoon, who's exceptional with volume profiles. I know like other traders as well out there who are really good with it as well. Follis is another one that comes to mind, and some of his crew over there at Chroma who are very good as well. But what you're looking for there as well is, you have that value area, right? And you're basically setting out a range when you're setting out a value area, and you're looking for what happens when price loses that value area or when it reclaims it. Basically, this is price in a state of flux where it's kind of, okay, people consider it worth a buy down here, but people aren't considering it value up here. So it moves between the two levels until you get this breakout, right? So we'll pop that in there. We'll use that in case we want to draw back on it later. But it's a very simple premise. And actually, all you're doing is you're looking at that same kind of thing here. So a lot of people saying, well, what do we do to trade it then? Well, quite simply, if this is our range, just for argument's sake, then we want to see price back in this range, ready to move higher. And we don't know what it does at the range highs, but that's a problem for when we get there. And there is a reason to all of this, because a lot of this comes down to where people are buying and where people are selling, right? Because we want to be focusing on the extremes. So I want to kind of tie this piece in with a larger concept piece that we're going to cover on the altcoins today as well, which is really looking at where you should be buying and where you should be selling. The reason for that as well is because we see a lot with, say, retail and bits and pieces come in. And something that can help sometimes, but can also hinder, are the use of oscillators. Now, people say to me, you don't really typically use indicators, oscillators, etc. And actually, I used to trade these very consistently. Right? In fact, this was an RSI that was built by a chap, I believe, called Fakira, who very kindly shared the code with me and then helped me kind of put these, divergences and hidden divergences in here to kind of help. However, typically what I use for that is our in-house indicator, BPRO, all right? Now, what you're seeing here with divergences is where there's a disagreement between the oscillator and the price action, right? So what BPRO does is it takes, I believe, 12 or 13 different oscillators and then combines the deviation scores and then gives you a percentage here for how strong that score is, all right? But either way, this is something that you can combine into your range trading plays, Like we said down here, for example, when price was kind of, chopping around in this range, well, this is where we got the deviation signal, the sign of that strength stepping back into the range, retest of the lows, and then we start to get the breakout. So we can look at things like that as well. However, what I really want to kind of focus on today is just kind of key kind of levels, areas, and concepts. So, for example, a lot of people saying why this area here was in any way an interesting buy. And for me, using very, very simple methodology here, if I'm looking at this as the expansion leg higher, low to high, with the Fibonacci, here's the 0.5 level. From a risk to reward perspective, it makes more sense to be a buyer below here than it does a seller. You could find support here at the 0.5, which we did. You can find it at the golden pocket as well, and all the way from the 705 to 709 levels are key areas as well. And now when I'm lining these up, I'm then looking for areas of confluence on the chart that tell me, okay, why would price stop here? So as we covered earlier, this is like, if you look at this area here, we'll just focus on kind of the tops of the bodies, for example, or we'll take it up to the wicks, why not? Then this area for me is going to be interesting when price returns here. And this is aligned with our golden pocket as well, right? So that's the 0.681, the 618, sorry, and 0.66 as I use it here. And then I include the 705. This is a really key area for me. And the fact that this lines up with the top of this consolidation is what led me to believe that if we do lose this area and we fail to hold this gap, this weekly gap, which we are at the moment, then this, I think, is the real key area of support down here. Now, this all is obviously underpinned by what's going on in the markets, what's going on with interest rates, what's going on with risk on, risk off sentiment within the markets, which is why we're going to look into that. But just to clear that up, because I was getting a lot of messages, people kind of saying, seeing a lot of things out here about power of three. Do you think this could be the deviation price coming back in? Are we going to rip from here? The truth is, you never know. You have to kind of overlay these things, and then you make your own. Assessments. For me, I like trading gaps, highs, lows, where I can kind of visibly see liquidity, right? And the reason for this gap here is price sold off. We set this bearish order block here, which is just the up close candles after taking liquidity from the higher. So showing there was no acceptance here, price broke down. And then we're looking within this area here for the down close candles, to offer support to price. Now, when we're coming back into here, when we close below it, and it was only a sliver of a close, but it's a close nonetheless. And we saw obviously this huge reaction bounce here, a lot of kind of like news catalysts. I think we had a lot of information coming out about Trump, or maybe a little bit of misinformation, the strategic reserve and bits and pieces like that. However, from a technical level, the thing that I can do is I can look at this low and say, well, there's a lot of liquidity there. Why? Because there was, a lot of buying that happened here, and it happened within this gap. So the plan was very simple, to look at how price reacted that low. If we close below the low, and especially if we close below the gap, then we would look lower to the top of this consolidation. However, recovering this low, seeing the long downside wick and the absorption that came in here, the buyers stepping in, we're now expecting price to move higher. Now, we don't have any gaps, inefficiencies as such to draw up to here. I'm not saying we're going to draw all the way back up to the retest of the order block, which we didn't get initially. We came very, very close, but that's around 94,500. All right. So what we're going to do now is we're just going to very quickly look at the daily and say, okay, well, what are the parameters that we want to meet? What's capping the market? What's stopping us kind of, doing that? We've seen that nice reaction here. We've seen that kind of initial pump. And then I'm saying to myself, well, what's kind of stopping the market's progress here? And it's this daily gap. All right. So quite simply for me, we need to see ourselves close above this daily gap. And then we've got a slither of a gap to contend with here as well. But once we kind of take care of those inefficiencies, we want to see these areas move to support and price to move higher. Now, to give you an example of that, we can see on the 4 hour, I think I might already have this drawn up somewhere. Let's have a look. Yeah. And this is the plan that we've been playing to, right? Daily gap here, so equal highs were always going to be a very, very difficult thing. If you see large expansion over there and price establishes itself here, like this line, that's when we look to long this higher, all right? Until then, we were looking for these inversion gaps, right? So in this case, they're bearish gaps. You're looking for bearish gaps to reject price and price to move lower. When you close through them, they become inversions, and we look for these areas to hold as support. We had the key one here that was that initial kind of point of the move. This is where price started to take off. Then we had this secondary one here. We've closed above that, and price is still continuing to hold this level. Now, what it's doing is price has dipped in, taken local liquidity from this low, all right, also from this low. Yeah, so you had relative equal lows here. Now we've seen that nice expansion to the upside. However, looking at what we discussed with our gaps, we're kind of in an area where we're running into a lot of resistance. I'll just do this one in red to really kind of highlight the fact. All right. Now, on the daily scale as well, we had this order block. Let me just pop back to the daily so you can see that clearly here. That's the down close candle, price closed above. We're looking for the 50% area of this to hold, which it's done. Now price is kind of trapped here. And I think when we look at the major news catalyst that we have coming up today with the FOMC, I think this is going to play a really, really big part. All right, now it's very difficult to trade these news events because by the time, the catalyst happens, prices either run far too far away from you or it takes that move to the offside before correcting back down. So I'm somebody that likes to wait for the dust to settle. So the plan on Bitcoin for me is really, really super simple. All right, we were looking for long positions from down here as well. At the moment, very, very neutral. All right, because as we sit in here, and again, Just Pit, amazing price action trader we have as part of the trading team, has had some brilliant longs firing off from the bottom. So has the trading tank as well. You definitely need to check those guys out as well as Resume. So now we're neutral, in profit, sat, stop secure. This is an area that I don't want to be longing at, right? We're just going into all this overhead resistance. So just for clarity, just zooming out, waiting for this daily gap here. I need to see price get above this, close above this. And just as this line shows here, right, we want to see price above it and then treating this area as support, looking at an area that should have been rejecting price, flipping and then holding price, shows us that price has got acceptance at that level and then ultimately is willing to probe out higher levels for price. Okay. Sorry, Evil Gemini, but I missed that as well. United States MBA mortgage application minus 6.2%. Wow, March 14 versus previous 11.2%. Again, it shows that contraction, right? It shows that uncertainty that's coming into the market. While you've got rates high, it's a lot more difficult for people to get mortgage products, right? It's just, I know people whose mortgages almost kind of doubled here in London, and with some of those mortgages being considerable amounts of money, it's a really big change. And it doesn't matter how much your property's worth, it's all relative to what your income is. And while incomes are flat or arguably going down relative to inflation, people are really, really struggling. People in, all walks of life as well. So it's becoming a very, very challenging environment. And this, again, is another one of those indicators that tells us and really kind of highlights that. Hey, Nick, how you doing, man? By the end of March, I'll be on time again. Yeah, exactly. I think the time change catches most of us out, doesn't it, as well? And I hate it here. How are you doing, my friend? So Bitcoin prices, for me, is quite simple right now. I know we started the technicals first, and it's a bit of a shifty move from me because the viewer numbers go up throughout the show. We normally get to kind of the halfway point and we've got a couple of thousand more people than when we started. And I really want everybody, I know this probably isn't why most of you are here, but it's such a really key part for me. I just want to run through, the news with people as well, right? So let me change over onto this. And what we can see here is, I was talking about this earlier, the Bank of Japan policy rate. Now, for those of you that don't know, the Bank of Japan was sat at the neutral and negative rates for a long, long time. Now, with inflation, but with an economy that's recovering, then there's the want to kind of put those interest rates up. Now, we used to look at the yen actually as kind of a little bit of a proxy for risk on and risk off environments, but I think the market's interest in this has been so peaked recently to see if they are going to put that up. And what's really interesting for me is reading the kind of statement that came out of that this morning. So they've kept the short-term policy rate at 0.5%. All right, God, how much would we love that in Europe and the US, right? But it doesn't always mean that the economy is that healthy, right? They're looking at a point of recovery, all right? And then the reason for that is Governor Ueda warns of heightening global uncertainty in his speech this morning, right? So that's a lot to do with the tariffs, okay? So you've got geopolitical situations, obviously the unfortunate situation that's happening in Russia and Ukraine. You've got the escalations again in Gaza. Not going to get into the kind of politics about that kind of thing. I've got my thoughts on all those things, and basically it boils down to the fact that just governments screw everyone across the world, right? Arms companies, privatization in the US, etc. But anyway, we're not going to dive into that today. What I am really interested in, though, is the fact that you've got such a massive economy like Japan, and this just highlights to me the importance or the kind of weight that is put on this decision regarding the tariffs and the policies that are coming out of the US right now. The optimist in me is saying that Trump is causing this storm deliberately, which I think is true, because what a lot of people maybe in this space don't understand is that the US are getting ready to to service their huge debt pile, right? And when they do this, and when they have to kind of when they need to service this debt, they can do it through the bond markets. And the bond markets yields are particularly high at the moment. And the problem for that is they're not going to want to refinance all that debt with the bond markets being as high as they are, okay? Because they're having to, they want to get that out with the yield being as low as possible. I'm going to cover that again in a moment. But, when major economies all around the world are basically holding and saying, do you know what? I think Japan probably wanted to tweak the interest rates up a little bit. They're doing well with inflation. The economy's kind of recovering. Rising food costs, wage growth as well could drive inflation up over there. So they need to be really, really aware and really nimble, these countries, in order to make these effects. However, everybody's looking to the US at the moment and saying, okay, well, nobody knows what Trump's going to do with these tariffs. What's he going to do? If that's going to drive up inflation in the US, which a lot of economists think that it's going to do, then the US takes a few kind of steps a little bit closer to a recession. Okay, so there you go. That kind of boring stuff out of the way. If I find it really interesting. I know a lot of people will kind of message me in these and they're just like, Jesus, can you just not talk about rates and policy and stuff? But it's so intrinsic to our markets, right? So very important. Anyway, as we are here, right? Federal funds rate, that's 6 p.m. UTC. All right. So we're 4 hours currently after the change. So that's going to be 2 p.m. In the US, all right, well, East Coast anyway. Now, the market expects, in terms of when you hear this phrase, what is priced in, that the market expects rates to stay at 4.5%. All right. They don't expect any cuts, and they certainly don't expect the rates to go higher. Now, when the market has that priced in, we could just see this kind of a little bit of a nothing burger. It's going to be very neutral, but ultimately what's going to change or move the dial today are going to be the economic projections, as well as the FOMC statement, which we're going to be watching incredibly closely for Powell's tone. Okay, so if we get through this in a neutral way, which I don't think we will, because the forecasts I think are going to be adjusted, and again, it's all going to be about the positioning and the placement of what they're seeing, why they're seeing it, what they're using to interpret the data, how that data is washing through. But ultimately, if the markets then just start to absolutely rip because they think those projections are positive, and bearing in mind that they have priced in, I believe, this year that they expect 2 25 basis point cuts, right? So for it to go maybe down, best case scenario, down to kind of 4% by the end of 2025, they could come out and the projection could show that maybe there's room for more cuts, or that they're dealing better with inflation, or they've got better growth projections as well. In which case, you start putting all of that together, the market could react really positively. Equity markets start to pump, risk assets start to pump. That's when Powell can then use his statement to calm things down a little bit. He can come out with a hawkish statement, and it's all about the tone of what he says. For example, he might say something like, look, even though the economic projections are looking good, we still have major concerns about rising inflation, and we haven't managed to price in the tariffs yet. I don't think he'll talk directly about tariffs. I think he'll typically stay, quite narrow in that. I don't think he's going to move into policies too much. I don't think he's going to talk about tariffs too much. He's going to be talking about, jobs numbers, inflation, the health of the economy, etc. But that's why today is so important. Now, to go back to the charts, so thank you for sticking with me on all of that. By the way, I only cover this stuff in very basic terms, right? I love the macroeconomics. I love learning about the markets. I think anybody in this space for long enough, you become a lifelong student of the markets, right? But there are some amazing macroeconomists out there, all right, who you can listen to. David Bell, for example, is one who I have infinite respect for. Macro Alf, people like that. So, make sure you do have a little bit of a handle on that, because then when you look at when this is going to kind of take off, or when you're looking for the market to be in a position where, crypto and risk can catch a bid, understanding this is going to be really important. All right, anyway, so we're now back to the chart, and I saw I had a question here, I think, from I Hate It Here. Sorry, I missed. What level on BTC needs to be reclaimed and hold to be bullish? Yeah, sure. So look at this. For me, and again, this isn't financial advice. This is just simply how I'm looking at the markets. I don't know if I can just get rid of this. Yeah. Tie these things up a little bit, don't it? Right. Is here. So we have this daily gap. I'll just do it in red at the moment. We can see this is what's capping the market, right? We kind of zoom across to here. We also have this kind of pivot point within this gap, right? So if I'm looking at that and I'm saying, okay, absorption from these wicks through to here, you kind of got an SR level there as well, right? In a kind of local sense. You want to see price big expansion across here and then hold this level. So whether you're somebody that trades gaps or not, for me, I'm looking at this gap here and I'm saying the top of that gap is pretty much about 85,262, all right? What we want to see, or what I want to see, is price have a strong move above it, yeah? And then close, and then I want to see this area then retested, yeah, as support. And then on a lower time frame, say like a 4 hour or something like that, or maybe like an hourly if we're using a daily, I want to see some structural recovery. Yeah, I want to see price reacting at a higher time frame level, turning this resistance. Look, it was support here, right? The market couldn't push beyond this. Look at the long wicks coming down, the absorption, buyers stepping in until it does lose it. And that's what I mean by a strong close. Yeah, big, strong, bearish, full body candle below, and then every test of this area is getting sold off. What's quite nice is we can see that, you know, if you were looking at this as a trend line, you can see the lows getting higher. All right. Sorry, you're right. The Husky's in the office with me today, and she just let out the biggest yawn. So you can see they're getting higher, right? Price is compressing up into this kind of, you know, you're looking at this like a triangle pattern as well, right? Which, by the way, if you want to study that, people like Crypto Bird are exceptional, but Axel Kaibar, we have him on Congress, fortunately, every year, and just a wonderful, probably the best pattern trader in the world, I would think, in terms of the data and the information he has. So if that's something you're interested in, then that's who I would go to. So that's what I'm looking at there, all right? So I think up, hold above here, into this area. Don't try and be a hero with this, right? You know, in the same way that if you're like rejecting from these areas, and look, we've seen a lot of uncertainty in the market. So we've had a really big sell-off here. I'm not saying this is the ideal area to short, but just to show you this in context, right? If we move from here to say a 15-minute chart, right? And if you're on a 15-minute chart here, and when you get yourself into this big red box or engaging with this blue box, which is the resistance area, then you can do something just as simple as you're playing the odds here, right? So your higher time frame is telling you until you reclaim this area, you're bearish. So you need to get every other thought out of your head and you need to focus and say, okay, well, if I'm bearish on this time frame, my higher probability trades are lower. So you can trade things in a lot of different ways. But one of the things that I think is, you know, always a good play is looking for local liquidity to be swept. So we take this high, there's your deviation. You're looking for the low, yeah, that led to the sweep of the high. So then you're looking at that and you're saying, okay, if that's your breakdown level here, well, then you can obviously be short from here. And you know where you're wrong, either the local high or you can put your stops above the main high, all right? And then what we're looking for here, you know, obviously as you go across the line, obviously you don't want to cherry pick these things, but a similar situation here, sweep of a high, right? I always wait for those sweeps of the high. You want to see local liquidity taken as well as high time frame. There's the low that swept the high. Price breaks down here. You can be short from down here. All right, with your stops above here, knowing where you're wrong. We just want to see the opposite, right? So we now want to see it in the situation where, you know, again, worked here, right? We now want to see the situation where price is getting itself above here, yeah? And then when price establishes itself above here, that's where we want to see a sweep of that local low, a break of that high, and then this is where we can be buyers, all right? Now, I'm not saying you can't long from here. Don't know what, you know, everybody has their own systems and strategies, but for me, I'm looking for that kind of confirmation. And if I move over now and I move back to the daily very quickly, like we were talking about here, it's about, you know, value. So you're looking at this area. If we do, as I just to kind of complete this for you, looking at this in terms of the volume profile, and again, there's people out there that use this more proficiently than I, all right? But this is the value area, yeah? Value area low, value area high. And look at what we were discussing previously. You're looking at these deviations. I'm just going to keep these in blue, whether they're lows or whether they're highs, all right? Yeah, and then look what happens here. See that really big move here. Now, this was a sneaky one because price did climb back inside the value area, right? But then even if you went long off on the retest here and you get stopped out, price comes back down and then you just get that beautiful retest of that level, right? So again, you're looking for support, buyers, yeah? Weakness, Buyers stepping back in, lost that level, retested this level, people selling off. All right. Same way with this. You're just not getting acceptance above these levels. And a good way to trade these, very similar to like the really great price action and range traders do, people like SC, people like Dank and stuff like that, is looking for these breakouts and then to confirm that this isn't a deviation, waiting for price to establish itself above there. Yeah. And then you've seen price establishes itself. Otherwise, you're just never really sure until that moment if that is a deviation and price is stepping back within the range. All right. So that's where we are. So looking at this now, I just want to cover the equity markets, or actually going to look at the S&P 500 and the NASDAQ. Well, actually, we'll kind of just focus on the NASDAQ. Jojo, hello, mate. Burnside as well. Great to see you. And then we'll just look at some alts. Does anybody have any particular alts they'd like me to take a look at? If not, we'll run through some of the typical ones as well. Yeah, we'll definitely take a look at ETH as well, mate. No problem there. Let's just very quickly take a look at the NASDAQ. All right, so kind of interesting level that it's kind of come back up into here. We've seen kind of a bit of an early stage rejection. Again, would really like to see price above this. It's not the cleanest level in the world. You know, you could argue, okay, actually move it down a bit lower here. You know, sell off here, price gets this level, consolidates above. This led to a big move higher. This was lost very easily, looking for the underside retest. We've seen that initial sell-off. So looking for the NASDAQ to get back above here. The reason this can be quite interesting or important for is it's an index created with, you know, a lot of technology stocks, right? So we kind of look at that as like a proxy with Bitcoin as well, all right? So with this, we've seen a kind of little bit of an early stage, you know, recovery here because we've got the inversion gap. All right, so let me just get rid of that for a moment so it doesn't distract us. We've got the inversion gap here, prices above, and it continues to hold this level. And for me, this is the key area to hold. As I'm then looking up on a kind of daily scale, I'm saying, well, I'm not saying we're going all the way up here, but the next swing, the next high is over here, is a high within this gap. We need to kind of start continuing to close above these down close candles as well. So if we look at the earliest stage of this recovery, it was when this order block was set here. Price had come down, taken liquidity from over here. So we had the sweep. Price then stepped back in, formed this down close candle. Price closed above it, retested it, and is now moving up. In the same way that if we look along the line here, it's when you lose the up close candles, yeah, price closing below them, that these areas, you know, start to act as resistance. All right. So now what we're doing is we're looking at the other way and we're saying we want to see the down close or the bearish candles here starting to offer support. And yeah, I think the recovery in the S&P 500, recovery in the NASDAQ is ultimately going to be good for crypto. DXY, right? If we look at it here in the range, as we covered on the show, we were looking for this level to be run out. It is, price is holding the midline of this range here. Ultimately, everything's on hold at the moment, I think, until we see the FOMC decision. But this, you know, when we look at the bond markets as well, to follow up on the context there, we're looking at these in respect of some kind of recovery, all right? So we can see the US 10s, for example, came back down to this key level. We're now starting to see these yields creep back up. So on the US 10 at the moment, you're about 4.2, or you're exactly 4.296. That's the yield that you're getting paid for buying government debt. Now, when it was all the way up here, 4.8, you can see why the government, if it's selling that debt, it wants to pay you the least yield possible. I mean, in an ideal world, I think it wants to be, you know, if we zoom out and look at the higher time frame levels here, we can see the price wants to be a little bit lower. I mean, maybe it does kind of come back down into these levels, but, you know, ultimately the US are going to want the price as low as they can get it when they want to reservice that debt. Okay, it's just a little bit on the bond markets for you there. Now we will feast back on the cryptocurrency degens here. We've seen a 4.52% move up in ETH today, which I do find really interesting heading into FOMC. Now we're still over 6 hours away, right, from that decision, and you know, you can sometimes see this little bit of a free for all in the markets at the early stages, right? Because, you know, it's this positioning. I don't think major players are going to be hugely active today, not going to be wanting to take on risk. They're going to be well positioned already heading into this. So the markets have a little bit of retail playtime, right? I think, you know, I'm not sure that this is institutional buying that's going on at these levels. But on a technical standpoint, you know, it's all actually pretty decent. In fact, let's go on to our traditional ETH chart that we use here as well. Oh, sorry, I hate you here. I missed your question there. ETH is moving, thank God. Always one of boring morning pumps prior to New York Stock Exchange open. Yeah, exactly. Have it ever continued to follow through? I guess hard to tell with so much going on. Yeah, I think when you look at equity market opens, typically on the lower time frames, right, what you get is it's not going to be the best example on this actually. Let me use a perpetual chart very quickly, because one of the things that I wanted to cover, and it does kind of come into this quite handily here actually, I'm going to put on our in-house indicator that's actually built by one of our members here, that shows the US equity market opens and the times that these open as well. So you've got the pre-market here and then the actual market open. If you're looking, I don't know if you guys can see this clearly enough, maybe if I do it on a 5 minute, it'd be a bit easier. But what you're looking for here, there's two lines on here. The black one is New York midnight, the red one is New York open. So what I hate you here is talking about here is the equity market open, right? Which we're going to be coming into in just under an hour's time from now. So this is the red line here. So this is where we get the open at 8:30, which is New York time, all right, which is 12:30 at the moment because we've got an hour less here in the UK. Now, what you're looking for here is that initial move. So, for example, you see this one here, this massive wick. You often have these volatile news releases that happen at the same time. And what you often see is price moves to the offside, taking liquidity before it sits back into its trend. Now, on the flip side of that, if you're then looking for price to recover, as we see here, often you see that you get these nice long opportunities intraday below these levels and decent short opportunities above it. Yeah. And then as you look at it across here, you're very welcome, mate. And film my shorts, evil Gemini. And then as we look across here, very similar thing, right? So you got the market open here, moves down, pumps, yeah, deviates the US open back below, and then you get really nice long opportunities here when we sweep out the liquidity of this move. Often, you know, if you're looking at this, you're moving into some kind of Fibonacci based area, golden pocket, and then price pumps. To be honest, it's, you know, I'm an intraday trader, so day trading is my kind of area of specialty. So this is why I use a lot of this information. I just wanted to kind of show you this big market reaction that we got here, all right? And I'm not really sure what that catalyst is. I do just think that the markets are probably a little bit illiquid today because, you know, most major participants are going to be sidelined until we get the FOMC. Otherwise, it's just going to be a really, really, really big shock if you're caught the wrong side of that. Now, looking at this in the 4-hour candle makes it look even more impressive. But just to run a little bit of analysis here for what I'm looking for, well, I want to start in that case on the daily scale. As I said before, you know, I'm very heavily focused on these gaps. This is a bearish gap until we close above it. If the pump today sustains and we hold here, then I am absolutely happy as Larry, and we'll be looking for something like this, right? When this becomes an inversion gap. So if we close above it, this then changes to purple on my chart. You'll see me expect this area to act as support. Now, what I'm also looking for, especially from any of these kind of like extreme wicks here, is just looking at this kind of just general area, just trying to get as many of the wicks in as I can, right? It's not an exact science, but I'm just saying to myself, okay, is this a pivot point here? The last point that price found support, carved through it, resistance, 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 resistance. Now, if this is where the sellers were, think of it like this, right? You've got the world and his wife short selling this market here. Yeah, everybody that they can is coming in. They're going, right, you're getting all these wicks to the upside. Price can't get up, price can't get up. Now, when these people, or if these people are proven wrong, and then you get the move like this today to the upside, but then you get something like this happen. Well, when these people are offside and say their entry's in and around here, when price returns close to their entry, if they're convinced that they're on the wrong side of this trade, this is the area they get to mitigate. They get to either close their positions out at entry or for a minimal loss, then they can move, yeah, onto where they think the market is going, which in this case would be higher. And then what that does is that then injects and fuels the bullish bid, okay? So in terms of that on a daily scale, that's what I'm looking for there. So I look across the line, do I have any other confluence at all for this level? So you can always draw these back and see historically if it's meant anything as well, which we can see, not the cleanest in the world, but actually, yeah, as you look at this here, resistance, deviation, price sells off, resistance, 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 big sell off. See this area being deviated, strong close above. And this is what we're looking for. This is basically a fractal here of what we're looking for over here, right? Because you want to see that strong move up. It's like that daily candle that we've got at the moment, right? Get that in your head, that daily candle. And look at this here. Very, very similar, right? See the way that it comes up. And then you want to see it in an ideal world, you want to see this gapping, yeah? So that's a failure of order pairing. Basically, you know, think of it like this. The buy orders are flooding in. The market can't fill them quick enough, and you get that slippage, you get that aggressive move up. This then becomes a really good place for other players to get involved, to be long when price returns to here. That's why you so often see these gap, these retracements to gaps. So this is kind of the fractal of what we're looking for over here, right? This is that early stage recovery, the deviation of this level, price stepping back above it. My main concern at the moment, obviously, is without more information on how FOMC plays out, there's, still a chance that this becomes a deviation. Price moves back under this level there and then sells off, in which case shorts down to the immediate swing low would be on the cards for me. Again, I'm not looking to actively trade this today because of FOMC, but let's say we get that move up, FOMC decision gets price back down, closed back below this area here, then looking for pullbacks, to this area to be confirmed as resistance are exactly how I want to play it. And you know what? Let's say I'm wrong. Let's say price doesn't do this. Right? Let's say we get this and we go, right, we get the close underneath, and then I take up a short position here to trade it down to these lows. Well, say I've got a stop loss above here, and then let's say I'm wrong. The market recovers this area, takes out my stop loss, and then I'm minus 1R. Why risk is so important? Well, then when we've seen this happen and we then say, well, this is the deviation of the lows. So we look for pullbacks here to get long again. And then, you're watching these areas and you'll say, people get so caught up in being wrong that they don't learn from it, right? Being wrong and being right are probably two of the most harmful things in trading, because you get so caught up in being right, you forget that it's not a game of being right and wrong. It's a game of profitability, right? Some of the very best and most profitable traders I know have really low winning rates in and around about the 30-35% mark, some lower, but their risk to reward is much, much higher, right? So, you have to kind of take that on the chin. So, looking at this from here, I mean, let's maybe just take a quick look at Solana, see what the plan was for Solana, because I don't think this has really changed much. We were looking for rejection at this level here, which we've got. Price ultimately moved down to our key area of support, which we're still in, right? And again, here, this was the bearish gap. We're looking for price to close above. We got the close above here. So at this point, I'm on there and I'm saying, okay, I now want to see this act as support and then to push price higher. Then what happens is price then comes down and closes below, inverts this gap below. So now price is trapped below this and this. So what does that mean? Well, it means that I don't want to actively short this because we're very low in the move, right? But it just means that I have a really clear plan. The longer price holds below here, then the more chance of us going down. What we want to see is this area, exactly as we were talking about before with Bitcoin, or with ETH. Watching price come up and completely turn this area, actually hold this area now, get above those highs, and then we can start positioning ourselves here for some long trades and maybe even bringing some swings back onto the table as well. One other thing, I know we covered this on Monday, but I do want to take a look at the ADS token as well. This, as I was saying to you before, bought some more in here. Really, really happy with that so far. For those of you that don't know, please do go and check out Alchemy. So a lot of you won't know this, and some of you will from the live shows, but I was, I used to build and sell companies for a living years ago, and one of those was a digital marketing company, and it's an area that I know a relative amount about, but it's an industry I certainly very well connected within, and it's something I've been saying for a long time is really, really ripe for disruption. And I think these guys at Alchemy, and the ADS token is their token, are incredibly well positioned to do this. I mean, they have got, and for anybody interested, I did an information piece on them the other day, which you can find on my Twitter. They're partnered with companies like Coca-Cola, Google, stuff like that. I mean, what they're doing with Coca-Cola alone is enough to massively, massively transform this. And when you're looking, right, for these tokens, And it doesn't matter what it is, as long as you've got conviction. For me, I rely on, really, really smart fundamental analysts, etc. And I do my own research as well, of course. But I tell you this one thing, as somebody that's a price action trader, one of the things I hear the most is, oh my God, wouldn't it have been amazing if we could have been involved down here or down here or down here? And then you get to a point where price is there again and people just don't want to buy until you're like up here somewhere. And then what happens is people buy in and then you get something like this. Just happens all the time. So again, it's not financial advice. I'm not telling you to buy, but what I would love for people to do, and a lot of people are doing it, there's a lot of savvy money coming into this, is just go and check this out. If it's an area that you've got some knowledge in, when I'm investing in projects, whether it be cryptocurrency or traditional market, legacy market, etc., I want to have an understanding and I want to have a knowledge base about what they do, how they can be successful, who they're working with, what their plans are, who they're partnered with. These conditions are all about a flight to quality. You want to find quality companies that actually have a product or a service that's in place, that have users, that are generating revenue, ones that when the conditions recover are going to be the first ones with the fuel, the communities, the backing to just explode. All right, and that's my little fundamental update for you, which is going to make Chris, our fundamental analyst, really laugh, I think, if he watches this. So, guys, have a fantastic week ahead. I'll be live with you again next Monday. For those of you who are over with us at the Bird Nest, we'll be live trading starting in around about 25 minutes from now. We're going to get ourselves into the market open. For those of you that aren't with us, remember, you can come and join us at the moment for absolutely nothing. Exactly. ETH bounce. We're seeing the ETH bounce at the moment. The big question is, does it sustain? And that's what we're going to look at throughout the day. For example, some of the trading team, you can pop along, actually just come along and join, get up, sign up for free, runs through to the end of March. You can see all the trading team calls, you can see all of our profitability, what calls we've been making, what calls we've got coming up, education, courses, resources, just everything you want. Just come and be part of a really good community, and there's no strings attached. If you don't want to do that, absolutely no problem. God bless to everyone. Wishing you all a fantastic week ahead. Be safe. Keep an eye on the markets. Keep an eye on FOMC later as well. If we really want that catalyst to go in, and we're really looking for that kind of, that return to risk on environment, this could be that kind of initial stage of that. But do trade careful, all right? Have a fantastic week ahead, everyone. I look forward to seeing you all around the nest.